So very good afternoon to all of you. I'm Cristian Giacomini and I'm the CEO of Mod Finance International. Today I'm going to give you a bit of overlook of the decarbonization roadmap from a rating perspective and how we see this topic from our side. A bit of information about Mod Finance first of all. So Mod Finance is an Italian-based company that was established in 2009. We are licensed from the European Security Market Authority from 2016, and we basically providing ratings to corporates and banks. We have a very well-established position in the European market with mainly focus in the emerging markets. So we are expanding more and more, especially in Middle East, Africa and Southeast Asia, providing mainly digital products, solutions and models to support the financial stakeholders on the credit risk assessments of mainly SMEs. We evaluate more than 300 million companies globally, 65,000 banks worldwide, and we are more and more working with the credit bureaus because we always say no data, no party from our side. The reason why today will be mainly focused on SMEs. So we spoke a lot also this morning about the capitals, about sustainability, and covered bonds for sure, and so on. But we need always to remember that more or less 90% of the business worldwide is developed from SMEs, that in some way are the real engine of the economy. So we cannot consider how much important is the impact of the SMEs on the economy at the different levels. In some way, the SMEs are driving the employment and the innovation in all the markets, especially in the emerging markets. And there are a lot of challenges every time that SMEs are in some way involved in a financial process, because in the majority, especially on the small and the medium companies, we notice a big lack of knowledge on the financial matter, and they don't have access to a lot of instruments, they don't have access to a lot of tech. So in some way we have SMEs, real engine of the economics, with a lack of knowledge in the main domain of the financial sector and with difficult access to technologies and to information as well in the majority of the case. So what we did from our side was try to develop a model that in some way can help the right assessment of the SMEs. We just spoke here about the importance of data, the importance of the cross-border data and so on. And if in Europe we were assisting at these incredible numbers to share the information and so on, I cannot neither compare with what's going on, especially in Middle East and in some African countries, where transparency, first of all, and availability of informations and standardizations of the information is a real challenge. That's why we use massively innovation, so we use massively AI, machine learning, and so on to try to fill the gap. We integrate as much information as possible from a financial sector and macroeconomical data, and most important, we connect with the credit bureaus around the world to have access to the right information and to give transparency to the data itself. For sure, when we assess SMEs, the entity size, the longevity, the legal status, the governance, combine it with the trend of the industry, the impact of the relevant news that we can find in the sector where the company are operating or the company itself, the macroeconomics indicators, and for sure the political risks are all factors that are going to impact the assessment of the companies, and that is pretty much quite standard. standard, that is a poor quantitative assessment of the company. But nowadays, especially the capital market is considering a lot the sustainability of the company itself, the ESG factors. Everyone is speaking about ESG, it's fine, but there is a big word behind that. Is a critical factor, first of all, because nowadays a good ESG rating is what allow a company to have access to a certain type of funding, is more attractive for the investor, and in some countries is needed to meet the regulatory requirements. So we develop an approach that is pretty much data-driven, that is scalable, that is replicable, and most important is applicable to the SMEs, because it's simple to speak, simple in some way, to speak about ESG when we are speaking about large corporates, fine, excellent, but when we're speaking about ESG of a 7-people company in the middle of the Sahara, or in Tanzania, or in Bahrain, or in Oman, well, is already a challenge to explain what is the ESG, because the market is a little bit far away with Europe for some aspects. The policymakers, the regulatory aspects are getting there, but still, the SMEs, there is a knowledge of information. It's very far away to speak with Aramco, or to speak with Saudi Airlines, or to speak with Etihad Airways, where they have their own department for ESG and so on. But still, 90% of the economy is the SMEs, so it's where there is the challenge. So we develop an approach that is pretty much ESG oriented to support also the assessment of the SMEs, and we're making this our bread and butter. And the net zero targets that the world has in some way, and the target to reduce the carbon footprint is coming mandatory. I mean, in some countries is something that to get access to finance or to be part of some subsidy programs and so on, you need absolutely to comply with. And unfortunately, sometimes the SMEs are working in a sector that expose themselves to a very bad category, especially from environmental perspective, because they're energy intensive, or because they're operating in a sector where there isn't too much of sustainability. And so in these companies, there is absolutely a very high risk that need to be mitigated. The direction in which these companies are working is quite, I mean, is simple to operate more on the governance perspective, but in terms of sustainability, in terms of environment, if you're working in a sector that is a bit penalized, then it's starting to be challenged. And so is where the governance need to take over. So develop credible plans to in some way try to offset as much as possible and try to be more sustainable is something that is really appreciated from the investors. They want to see the responsibility, they want to see the governance, they accept the sector if it's absolutely in the domain of the SME, and then they want to see what the company is going to do to compensate. This absolutely is having a big impact on the financials, because there is no action without in some way impacts on the financial. And still, we need to think about SMEs, especially the small and the medium company. Just for a medium or a small company, develop a strategy to be ESG responsible means pay a consultant, means create a kind of internal policy. And all of these, if you are a company of 7, 10, 15 or 25 people, is draining your cash flow, is draining your time, is draining your resources. So that's why the impact on financial is absolutely important. And then this in some ways is a speed track to the finance, to access to finance, to the capital, if these activities are well done. And absolutely, the combination of these factors then we consider in the rating in a scoring perspective from a quantitative in the quantitative side, because the impact on financials is going to impact our credit model and so on, and from a qualitative perspective, because absolutely the ESG elements we factor in a qualitative assessment approach. We're very active on ESG, not only in emerging markets, but absolutely in Europe. We are joint force with a lot of members here in a couple of European projects, from Transparency and some others that are under development right now, to bring transparency for the SMEs, again, assessment into the market. And from 2024, we are fully compliant with as well the Global Rating Reporting Initiative standards. Absolutely, we basically, when we speak about ESG models, we want to emphasize three main elements. First of all, the class category that we develop. Still in the market, there is a bit of, let's say, disalignment on standards and classification. Is not just on the financial rating, as the previous speaker just mentioned, but in the ESG perhaps is sometimes more. We develop solutions that need to be flexible and transparent, and absolutely need to be practicable, because we can develop the best model, we can develop the best metrics, but then when we are out, we need to get it done, and we need to apply. So, and this we need to consider. A few words on Greece. So we are in Greece today, in this wonderful country. For some family reasons, I'm spending part of the year here. And I think that for the Greek audience here, Greece can really play a big role, and is playing already a big role. In our business, we have some shareholders that in some way have big interest in Greece as well, and so I'm saying something that is coming from the real world, let's say, from the world of the capital, and we see a great role of Greece to bridge the investment from the emerging markets to the European Union. Is full of initiatives of capitals moving from Middle East to Greece, and then from Greece to US, to Europe, in any country, and so on. And Greece is really playing a key role for a lot of reasons to attract capitals here. There is a momentum. The country is really under development. We can feel this in the air, and the banking sector is really adjusting and moving quickly to make it happen, and is coming in some way a very good hub also in terms of ESG. Greece looks like they want to be very responsible. They have a lot of initiatives going on, and they can really make a good example to transformation and to bridge capital. Is absolutely a strategic crossroad of regions. There is a gateway to emerging ESG and SME momentum, and absolutely is a great hub from a cultural, economical, and logistical hub. So, just to summarize here, absolutely, we need to be very careful to consider in all our brainstorming the impact of the SMEs. Again, approximately 90% of the real economy is generated from SMEs. We have countries where the number of the SMEs are basically growing at a rate that is incredible. Again, Saudi Arabia until 4 years ago, 450,000 SMEs. Nowadays, they are seated in more or less 1,300,000. I don't see any European country grow at this level. UAE pretty much same. And then if we speak about Indonesia, we have 65 million companies. If we include micro companies, we have 100 million companies. So if we consider the impact on the global economy of these companies, it's just massively, and absolutely there is a high potential to consider ESG topics in the assessment of the SMEs, to move capitals in that direction. And a note for the country that is hosting us today, a great role for this country to bridge capital, to put the right printing in the capitals moving through emerging markets to Europe and then US, and so on. And we can really create a good history here if all together we work in the right direction with the support of the decision makers, the policy makers, and the main stakeholders in the industry. Thank you very much.